Assalamualaikum and hi everyone. Today we would like to present our ratio analysis report for Petron Malaysia versus Petra Energy Berhad. Meet our team. This is Nur Syahira binti Mat Senin, Nur Zawani binti Hassan, Sharifah Fatin Amira binti Syed Faisal and Nur Aisyah Shafina binti Jaafar. We will conduct a ratio analysis for Petron Malaysia and Petra Energy Berhad, two companies in the oil and gas industry in Malaysia. We will use the financial statements of Petron Malaysia and Petra Energy Berhad for the year 2018 until 2022, which are available on their respective website. We will calculate and compare the following ratios for the both companies in terms of liquidity ratios, asset management ratio, leverage ratio, and profitability ratio. There are four objectives for this ratio analysis. First, to compare the liquidity ratio of the two companies, such as current ratio, quick ratio, and net working capital. Second, to compare the asset management ratio of the two companies, such as total asset turnover, fixed asset turnover, inventory turnover, and average collection period. Third, to compare the leverage ratio of the two companies, such as debt ratio, time interest earned, debt equity ratio, and equity ratio. Lastly, to compare the profitability ratio of the two companies, such as operating profit margin, net profit margin, return on asset, gross profit margin, and return on equity. Background of the main company, Petron Malaysia. Petron subsidiaries in Malaysia comprise of Petron Malaysia Refining and Marketing Berhad, PMRMB, a public company listed on the main board of Bursa Malaysia. PMRMB owns and operates Petron Port Dickson Refinery PDR, which has a rate capacity of 88,000 barrels per day, producing a wide range of petroleum products which include gasoline, diesel, LPG, and aviation fuel. Our world-class fuels are distributed from 10 strategically located depots and terminals of Petron subsidiaries in Malaysia. Background of the competitor company, Petra Energy Berhad. Petra Energy Berhad, listed on the main market of Bursa Malaysia Berhad, is an integrated brownfield service provider for the upstream oil and gas industry. The group began operations more than 30 years ago and today provides a comprehensive range of service for the upstream oil and gas industry, specializing in hook-up construction and commissioning and topside major maintenance. Liquidity ratio means to measure a company's ability to pay its short-term debt obligations with its current and liquid asset. It shows how well a company can cover its current liabilities with its current asset. There are three main types of liquidity ratio. First, the current ratio. Second, the quick ratio. And third, the net working capital. Today, we will delve into a comparative analysis of the financial health of two prominent entities in the energy sector, Petron Malaysia and Petra Energy Berhad. Specifically, we will be focusing on their current ratios over the past 5 years and what implications these ratios might have for their liquidity, financial risk, and overall operational stability. Before we dive into the numbers, let's briefly discuss the significance of the current ratio. The current ratio is a key financial metric that assesses a company's ability to meet its short-term obligations using its short-term asset. A higher ratio generally indicates better liquidity and a lower level of financial risk, while a lower ratio may suggest the opposite. Petron Malaysia has a lower current ratio than Petra Energy Berhad in all years, which means that Petron Malaysia has less current assets relative to its current liabilities. This could indicate that Petron Malaysia has less liquidity and more financial risk than Petra Energy Berhad. Now, let's look at Petron Malaysia's current ratio for the past 5 years. In 2022, the ratio was 1.1 times, followed by 0.97 times in 2021, 0.75 times in 2022, 1.05 times in 2018, and 1.38 times in 2018. Unfortunately, all these values fall below the industry average of 1.52 times, indicating that Petron Malaysia has faced challenges in maintaining sufficient liquidity compared to its industry peers. In contrast, Petra Energy Berhad has demonstrated a more favorable trend. Their current ratios over the same period were 1.69 times in 2022, 1.9 times in 2021, 1.4 times in 2022, 1.34 times in 2019, and 1.11 times in 2018. These figures consistently surpass Petron Malaysia's ratio and suggest a higher level of liquidity and a lower financial risk for Petra Energy Berhad. So what does these numbers mean for Petron Malaysia? The consistently lower current ratio indicate a potential liquidity challenge and a higher level of financial risk. This situation may lead to difficulties in meeting short-term obligations, impacting relationship with suppliers, employees, and creditors. Furthermore, it may force Petron Malaysia to rely more on external financing, potentially increasing its interest expense and debt burden. For quick ratio, Petron Malaysia has a lower quick ratio than Petra Energy Berhad in all years, which means that Petron Malaysia has less liquid asset relative to its current liabilities. This could indicate that Petron Malaysia has less ability to meet its short-term obligation than Petra Energy Berhad. Building on our previous analysis, let's now shift our focus to the quick ratio of Petron Malaysia and Petra Energy Berhad over the past 5 years. The quick ratio provides insight into a company's ability to meet short-term obligations using its most liquid asset. Examining Petron Malaysia's quick ratio, we observe a consistent trend of values below the industry average of 0.8 times. In 2022, the quick ratio was 0.64 times, followed by 0.55 times in 2021, 0.36 times in 2020, 0.48 times in 2019, and 0.9 times in 2018. These figures suggest that Petron Malaysia may be grappling with a lower level of liquidity and a higher financial risk compared to industry benchmark. In contrast, Petra Energy Berhad exhibits more favorable quick ratios over the same period. Their quick ratio were 1.1 times in 2022, 1.2 times in 2021, 1.05 times in 2020, 0.83 times in 2019, and 0.48 times in 2018. Notably, these values consistently surpass Petron Malaysia's ratio and indicate a higher level of liquidity and a lower financial risk for Petra Energy Berhad. Petron Malaysia has a positive net working capital in 2018, 2019, and 2022, but a negative net working capital in 2020 and 2021. This means that Petron Malaysia has more current liabilities than current assets in those years. Let's now explore the net working capital of Petron Malaysia and Petra Energy Berhad over the past 5 years. Net working capital provides insight into a company's ability to cover its short-term operational needs. In 2022, the company has a positive net working capital of RM239,334. However, in 2021 and 2020, Petron Malaysia experienced negative net working capital with values of negative 55,890 and negative 267,419 respectively. In 2019 and 2018, the company had positive net working capital of RM57,644 and RM519,594 respectively. In contrast, Petra Energy Berhad exhibits a more stable trend in net working capital over the same period. The company maintained positive net working capital in all years, with values of RM141,394 in 2022, RM146,298 in 2021, RM106,174 in 2020, RM82,885 in 2019, and RM32,200 in 2018.
The asset management ratio is the efficient ratio or turnover ratio is a financial metric that measures a company's ability to manage its asset efficiently in generating sales or revenue. This ratio provides insight into how well a company is using its resources to generate revenue. Investors, analysts, and stakeholders use asset management ratios to evaluate the efficiency and effectiveness of a company's operation. There are four categories of ratio. First, total asset turnover. Second, fixed asset turnover. Third, inventory turnover. Fourth, average collection period. Total turnover refers to the amount of sales or revenue generated by a business in a given period of time. It is a financial metric that represents the aggregate value of goods or service sold by a company in a given period of time. Revenue is a key indicator of a company's business activity and is often used to evaluate its financial performance. From a review of the Petron Malaysia past 5-year statements of financials and statement of profit or loss, we are able to produce the following table. In the year 2022, the Petron Malaysia has achieved to a higher TATO ratio of 38.5 compared to other years. This is because a higher TATO ratio is usually preferred as there are implications that a company more efficiency in generating sales income. Refer to a table comparison of TATO ratio between Petron Malaysia and Petra Energy Berhad. Petron Malaysia's TATO ratio achieved the highest annual increase compared to Petra Energy Berhad. Comparison in 2022, Petron Malaysia has achieved the highest TATO compared to Petra Energy Berhad in 2022. A higher ratio usually preferred because there is an implication that the company is more efficient in generating sales or income. The fixed asset turnover ratio is a financial metric that measures a company's ability to generate revenue from its fixed assets. Fixed assets, also known as long-term asset or property, plant and equipment, include things like buildings, machinery and vehicles. Petron Malaysia has seen a further increase in the FATO ratio in 2022 compared to 2021. This means that the group has managed its fixed assets efficiently every year. Comparing the 2020 compared to 2021, the ratio increased. Refer to Table 3, comparison of FATO ratio between Petron Malaysia and Petra Energy Berhad. Petron Malaysia's FATO ratio achieved the highest annual increase compared to Petra Energy Berhad. Comparison in 2022, Petron Malaysia has achieved the highest FATO ratio compared to Petra Energy Berhad in 2022. A higher fixed FATO ratio generally indicates that Petron Malaysia companies are using their fixed assets more efficiently to generate sales. Inventory turnover is the rate at which inventory stock is sold or used and replaced. The inventory turnover ratio is calculated by dividing the cost of goods by the average inventory for the same period. A higher ratio tends to indicate strong sales and the lower ratio to weak sales. From the review of Petron Malaysia's last 5 years financial statements and profit and loss statements, we were able to produce the following table. Petron Malaysia has recorded the highest ITO ratio increase again in 2022 compared to 2021, which at that time recorded the lowest ITO ratio compared to the previous year. This indicates an increase in the ITO ratio in 2022. Refer to Table 4. Comparison of ITO ratio between Petron Malaysia and Petra Energy Berhad. Petron Malaysia's ITO ratio is lower than Petra Energy Berhad. Comparison in 2022, Petra Energy Berhad recorded the highest ITO ratio compared to Petron Malaysia. In 2022, also the ITO ratio reached the highest increase compared to previous years. It generally shows that Petra Energy companies use their fixed assets more efficiently to generate sales. The average collection period, also as the days sales outstanding DSO, is a financial metric that measures the average number of days it takes for a company to collect payment from its customers after a sale has been made. It is a crucial indicator of a company's efficiency in managing its account receivable. From the review of the last 5 years of Petron Malaysia's financial statements and profit and loss statements, we were able to produce the following table. Petron Malaysia recorded a decrease in the IPA ratio in 2022 compared to 2021. Compared to 2021, Petron Malaysia recorded the highest IPA ratio compared to previous years. This given as impression of Petron Malaysia managing its debt efficiently in 2022. Petron Malaysia has made a profit as the shows the company collects payment faster. Refer to Table 5, Comparison of ACP ratio between Petron Malaysia and Petra Energy Berhad. Petron Malaysia has recorded a lower ACP ratio than Petra Energy Berhad. Comparison in 2022, Petra Energy Berhad has recorded the highest ACP ratio compared to previous year. This gives as impression of Petra Energy Berhad being less efficient in managing its debt efficiently in 2022. Returning to the company Petron Malaysia, in 2022 the company has made a profit because this shows the company collects payment faster.
A higher debit to asset ratio generally indicate higher financial risk, as it suggests a large portion of the company asset in financial by debit. A lower ratio, it generates conditions healthier, lower on the debit financing. In this case, the debit to asset ratio over the year with the highest ratio in 2019 in 76% and the lowest in 2021, which is a 72%. Rapid increase in this ratio might raise concern about the company ability to meet in the debit. The equity ratio for understanding a company financial risk and the balance between debit and equity, its capital structure. A higher equity ratio generally implies lower financial risk, as indicate greater proportion of assets are funded through ownership rather than debit. However, too higher an equity ratio might suggest that the company is not leveraged enough and may not be optimized its capital structure for growth. It's essential to consider industry and the company specific when interrupt this ratio. The net income is to average total asset ratio provide into how a company is generate profit relative to its average total asset. A positive ratio is generally distributed indicate that the company is effective using its asset to generate income. However, it's important to consider industry and a company specific when interrupt this ratio. Negative ratio, as seen in 2020, may raise concern about the company financial health and operator. Okay, so next is for debit equity ratio. Debit equity ratio for Petrol Malaysia 2018 is 315.56%, 2019 327.1%, 2020 305.74%, 2021 267.33%, and 2022 is 305.17%. The ratio 2021 decreased to 267.33%, suggests a further reduce in debit potential improve the financial stability. The ratio in 2022 increased to the 305.17%, indicate a relative increase in debit compared to equity. It interrupts this ratio in the content of the industry, the company financial goals, and its risk tolerance. While higher debit level can implant return, they also increase financial risk, especially in the company struggle to meet in debit ability. For Petrol Energy Berhad in 2018, they have 94.62%. 2019, they have 64.160%. 2020, 66.39%. 2021, 42.39%, and 2020 is 62.65%. A higher equity to asset ratio is generate view positive as its nature, a strong financial positive, a great stability. However, a balance must be struck as to higher a ratio might indicate and of the debit potential grow opportunity. Next, company often aim for a balanced capital structure that financial performance while managing risk for the company. Okay, lastly for my part is equity ratio. Equity ratio for Petrol Malaysia in 2018, the ratio is 4.15594, 2019 2.271719, 2022 4.05737, 2021 3.67333, and 2022 is 4.04104. The ratio in 2022 increased to 405.15%, suggests a relative increase in the proportion of the total asset found by equity. Okay, why a higher total asset to equity ratio can potentially increase return? It also increase financial risk, especially the company face challenge in meeting its debit. Okay, for the Petrol Energy Berhad, the lastly for this part is 2018 is 51.38%, 2019 is 60.9%, 2020 60.1%, 2021 70.23%, and lastly is 2022. Okay, for the last part is it essential to interrupt this ratio in the context of the company industry, financial goal, and risk tolerance. Why a higher total asset to total debit ratio can be portion ensure return. It also increase financial risk, especially in the companies struggle to meet its debit option. Company often aim a balanced company structure that analyze financial performance while managing risk.
That evaluate an organization capacity to produce profits relative to its costs and other pertinent expenses incurred over a given time frame. These numbers offer perception into a company's general efficiency and financial well-being. Profitability ratios are used by investors, analysts, and management to assess the performance of the business and make choices. There are 4 types under profitability ratios, such as OPM, operating profit margin, NBM, net profit margin, ROA, return on asset, GPM, gross profit margin, and ROE, return on equity. Operating profit margin, OPM. A profitability ratio called the operating profit margin assesses how well a business core operation produces profit. It offers information about how well the business is able to control its operating and business expenses. The operating profit margin can be computed using the following. Based on the operating profit margin (OPM) numbers, Petron Energy Berhad has a greater OPM than Petron Malaysia in most years. Nonetheless, Petron Malaysia OPM has getting better over time, showing a notable rise between 2020 and 2021. It is noteworthy that in both 2019 and 2020, the OPM for both companies was negative. Net profit margin (NPM). A profitability ratio called NPM, net profit margin, calculates how much of a company's total income remains after all costs, such as interest and taxes, has been paid. Stated differently, it assesses how well a business turns income into net profit. That is the amount of money left over after all expenses have been paid. The following formula can be used to get net profit margin. Net profit margin (NPM) numbers indicate that Petron Energy Berhad typically has a greater NPM than Petron Malaysia. Nonetheless, Petron Malaysia NPM has getting better over time, showing a notable rise between 2020 and 2021. It is noteworthy that in both 2019 and 2020, the NPM for both companies was negative. Return on asset (ROA), a financial ratio called return on assets. ROA gauges how profitable a business can make use of its assets. It shows how well a business generates profit from its asset. ROA is computed using the following formula and is expressed as a percentage. Return on assets (ROA), a financial ratio called return on assets (ROA), gauges how profitable a business can make use of its assets. It shows how well a business generates profit from its assets. ROA is computed using the following formula and is expressed as a percentage. A financial statistic called return on equity (ROE) gauges a company's profitability in relation to the equity held by its shareholders. It offers information about how well a business makes use of its equity capital to produce profit for its owner. ROE is computed using the following formula and is expressed as a percentage. Gross profit margin (GPM), the percentage of sales that a business keeps after subtracting the cost of goods sold (COGS), is known as the gross profit margin (GPM), which is a financial indicator. It offers perception into how well a business may make money from the sale of items and how effective its production processes are. Gross profit margin (GPM), the percentage of sales that a business keeps after subtracting the cost of goods sold (COGS), is known as the gross profit margin (GPM), which is a financial indicator. It offers perception into how well a business may make money from the sale of item and how effective its production process is. Based on the gross profit margin (GPM) numbers, Petra Energy Berhad had a greater GPM than Petro Malaysia in most recent years. On the other hand, Petra Energy Berhad GPM has been rising over time. A financial statistic called return on equity (ROE) gauges a company's profitability in relation to the equity held by its shareholders. It offers information about how well a business makes use of its equity capital to produce profit for its owner. ROE is computed using the following formula and is expressed as a percentage. A financial statistic called return on equity (ROE) gauges a company's profitability in relation to the equity held by its shareholders. It offers information about how well a business makes use of its equity capital to produce profit for its owner. ROE is computed using the following formula and is expressed as a percentage.
Based on the comparative ratio analysis of liquidity ratio, Petra Energy Berhad has a better financial position and performance than Petron Malaysia in terms of liquidity. Petra Energy Berhad has a higher ability to pay off its short-term debts and a lower risk of default or insolvency than Petron Malaysia. Petron Malaysia, on the other hand, has a lower ability to pay off its short-term debts and a higher risk of the default or insolvency than Petra Energy Berhad. Petron Malaysia needs to improve its liquidity and cash flow management to avoid financial distress and enhance its competitiveness.
Referring to the comparison between Petra Malaysia and Petra Energy Berhad in the asset management ratio analysis, Petra Malaysia is better than Petra Energy Berhad. This is because the company's ratio of total turnover, fixed asset turnover, inventory turnover and average collection period is encouraging. This reflects the company's ability to maximize its assets, streamline its operation and manage its working capital effectively. This indirectly, investors and stakeholders find such indicators attractive as they suggest a strong financial position and effective business operations.
Lastly, in terms of profitability ratios, Petra Energy Berhad looks to perform better than Petron Malaysia, indicating stronger operational effectiveness and financial stability. Over time, Petron Malaysia has demonstrated gains, particularly in net profit margin, suggesting that its trajectory may be improving. Concerns concerning Petron Malaysia's capacity to produce returns for its assets and shareholders are raised by the company's recent negative profitability statistics, especially ROA and ROE. Petron Malaysia's improvement point to a possible turnaround, even though Petra Energy Berhad shows a superior profitability ratio. A true assessment that takes into account contextual variables and industry benchmark is necessary to gain a more detailed view of each company's financial performance and future prospects.